Welcome to the Ideal Investor Show. This is the podcast where we help you challenge your mindset and discover where you are. Tired of stories about other people's success? We can help you change your life, determine your time freedom point, and join us on the journey to financial success. Let's go. Hello and welcome to another episode of the Ideal Investor Show, where we bring you great guests every so often and want to talk about all kinds of diverse ways of how we can make our money work. And for that, today we have something special because we brought David Doss to the show. Welcome, David.
Thank you for having me on the show, Axel.
Yeah, absolutely. And we're really excited. The audience wasn't here, but when we just talked a few minutes before we hit the record button, that was already
pre-gaming. Yes.
So there's great stuff to come, folks. I can tell you that already. But before we get into the nitty gritty, David, tell us a little bit, who are you, where are you coming from? How did you get to where you are right now?
I grew up in the Silicon Valley Bay Area in the backdrop of a lot of events happening in the world, ranging from a dot-com boom and bust to separate but related cycle of real estate boom and bust, as well as a lot of various macro political and economic, developments going on the kind of late 90s. So I was very fascinated with basically global interactions on a political and economic scale. And I was also really fascinated with alternative assets in the midst of all of this tech innovation and also these shifts in the real estate market. In graduate school, actually in Germany, I researched bottom-up civil and social development issues, basically ways in which the private sector small groups were able to catalyze change, and in particular how ideologies interacted with technology. So coming from that back into a career in Silicon Valley in California, Silicon Alley in New York, I was involved in a lot of digital economy initiatives, including tech startups, as well as digital transformation initiatives in larger organizations. So having spent a decent chunk of my career on those types of initiatives, I gravitated towards blockchain and cryptocurrency, which, you have that bottom-up social movement component. In many cases, you have this international applications, cross-border, et cetera. And then you have also basically alternative assets and emerging technologies and where these all intersect. So to me, this is kind of a natural progression of a lot of these things that I've been fascinated with since a very early age.
If you take what you just described, what is the point that you've reached right now? So how would your daily work look like?
Right. Yeah. Because that was a very abstract picture that I painted for you. A lot of philosophy, but the day-to-day, you're right, is a lot more nitty-gritty. So I run a company, a team that focuses on digital assets in general, and specifically two main areas within that. One is digital asset fund management, and the other is digital asset related consulting and program management. So on the fund management side, we're looking to essentially grow wealth, so actively manage digital asset portfolios. And on the development side, we help organizations to introduce blockchain, Web3, and crypto related components into their business models and into their sales, marketing, and tech stack.
That's super exciting, and there are so many questions that pop in my mind, even beyond what we have already touched on. So I guess I want to start a little bit and that is not so much on the asset side, but on the, you could call it distribution or plumbing or process side or so forth. I've seen it so many times because our Ideal Wealth Grower community operates internationally. Unless you're really doing it more than just once in a lifetime, it is just completely appalling when you're trying to get any kind of substantial amount of money from a bank account that you have, let's say, at Wells Fargo or something like that. And it doesn't matter which bank, I'm just picking Wells Fargo, could be any of the other banks. And you want to send it, let's say, to Banco Santander in somewhere in Europe. And it takes basically something in the order of a week for you to actually have access to the money, your own money.
Right.
So if you're assuming you have both, you own the one account in Europe and the other account in the US, it takes a week to have access to your money. So I talked to some experts. They said due to the whole structure underneath, it takes 90 days for the actual true ledger.
Wow.
And that's where where the connection to
Full
blockchain,
settlement.
where the ledger is really completely settled on both sides. And that
Mm,
is not even guaranteeing that it is correct on both sides. It's just settled.
right.
So I want to switch to, this is not about me, it's about you and what you do. But I want to ask you, so in that context, how is blockchain different?
Yeah, I mean, this is we could probably have a podcast episode just on this broader topic of money movements and all of these things. But I know that my background, I worked in Citibank's cities digital transformation initiatives with their city fintech division. And so, I mean, we would see this even, I mean, you raise a great example of internationally, but even just nationally within the US, going from one state to another, the financial system is so siloed, different tech rails in place, different regulatory frameworks, state to state. And the example that you're mentioning, I think, is spot on. And I mean, even beyond the areas that you mentioned, there's kind of a larger nexus of things to be thinking about. For example, if this were let's say a transfer from dollars landing in someone else's account as a different currency, it may actually be a three-legged type of transfer where first it has to get exchanged into a different currency. And so there's even more complexities that kind of compound in the background. A couple of areas in which blockchain and digital assets, cryptocurrency have been looking to help with these and related issues would be firstly, there is digital and blockchain based settlement systems that are being implemented around the world. For example, somewhat notably is Ripple, as well as Stellar Lumens have somewhat different use cases. But these are, for example, in the case of Ripple, this is something where they're looking to cooperate and collaborate with existing banks and existing institutional frameworks in order to help with settlements. The examples that you're mentioning with how much logistical complexity there is, it can be really prohibitive to go through all of that when it's small amounts, micropayments, for example. So one thing that an organization such as the ones that I've mentioned are really providing a major value add in sending small amounts of money faster and less expensively, with also dramatically reduced settlement times. I'd say some of the areas, another related one that comes to mind would be remittances, where you're mentioning something within an established bank system and framework, where if we're talking, let's say, sending money from New York City to London, right? But if we're talking about sending money through less common payment gateways and or to a more rural area, then in many cases it relies on systems that cost even more money. Where let's say a migrant worker is sending money back home internationally, it's going to be, let's say, $50 here, $100 there, and they may be losing around 25 to 30% of that in fees, while also not knowing exactly when it's going to get there. These topics you raise of reduced settlement time, reduced transaction fees, let's say reduced need to send huge amounts all together. So ability to send smaller amounts are all major areas that blockchain is looking to help solve.
Absolutely. Thank you for that, David. And tell me if I summarize that the way I understand it, if I have that right, or where I'm maybe tripping a little bit. To me, the way I'm trying to always like visualize things, because I mean, like I mentioned before, I've been in the Air Force, and one thing they trained us is, you're basically a visual learner, visual
Yeah.
comprehension. So for me, a little bit like you have a train with cards, and
Mm,
they are kind of open cards, the way I look at it. And when a transaction is basically started, someone says, okay, David and Axel want to do a transaction, and they agree
mm,
on the transaction, they hit the button. And now there is basically a description of the transaction displayed on that card with that address. And anywhere,
mm,
anybody in the world who needs to know what is this transaction can look into
mm,
that. The card is basically, in my little world, like a block. And that sits there, and we don't need anybody to send kind of like a form or fill out a form or send something through the internet, and then some administrator has to print it out and translate it, and there is no exchange. If I send Bitcoin to Bitcoin, the number, the amount is on there, and that's
mm,
it, right? I mean, to me, that's basically what it is. And when we then realize that that train is not really on train tracks, but the tracks are basically the internet, well,
right.
that's how fast that little card on that train comes to me and to you and
Right.
to anybody else who wants to see it. And it's there forever, right? We can't dispute that we did something because it's there.
Right.
How can this be so much cheaper? If you imagine the train tracks being the internet, it's basically instantaneous, right? Like if you and I were
Mm.
to exchange an email, typically we're talking way less than a minute. There's also really no cost, right? There is no person that needs to sit there and fill out forms and handle forms and print out forms and what have you. So
Right.
do you agree that's a reasonably accurate way of describing it?
Yeah, I like this image of the block train, so to speak. Makes a lot of sense. And then relatedly, just in larger part, there are multiple different kind of utilities and use cases that can be layered on top of it. But fundamentally, I think that's the underpinnings.
With that established, when you mentioned, like you're managing funds and you're helping people to grow their wealth and make their money work, can you describe a little bit what that mean? Like I have any of the 20,000 cryptos and that makes my fund, or or what are we looking at?
So yeah, it's an important question. So there are many different types of strategies in the crypto space, right? But what my team and I mainly focus on at CKC.Fund is to take a conventional proven models from other asset classes such as stocks or bonds and apply those into the digital asset space. So it is an emerging asset class, but our position is that digital assets are special just like any other asset class. So you still have to go through fundamental analysis. You still have to find what the utility, the use cases are. Right, you mentioned this block train could be in those carts is a variety of different use cases, right? This could be financial transactions, could be a smart contract platform that essentially has decentralized applications or dApps, somewhat similar to mobile applications that you might have on your phone. They could also involve decentralized file storage. This could be also store of value from an investment standpoint, really a variety of different use cases. But the point being that much like how conventional asset managers will conduct asset evaluation on stocks, find that can also in an adapted way be applied to digital assets. So when you
Oh,
have,
okay.
for example, an
Well,
equities portfolio, you diversify across high cap, mid cap, low cap. You diversify across, let's say, healthcare versus industrials versus, let's say, technology, financial institutions related. And then you're also often actively rebalancing based on shifting market conditions, rebalancing between different verticals as well as different market capitalizations. And that's the general principle that we apply.
okay, yeah, that's very cool. I have basically two questions for that. Are there Fibonacci calculations for crypto?
This raises larger questions, right? So this becomes,
I'm just
I
curious when
mean,
you say you treat them
yeah,
like other asset groups. I know that there's a
right.
whole world out there.
Well, so I mean, this is the larger question, right? So there are a couple of different related things to discuss there, right? So firstly, I mean, more talking about like retracement and kind of a bit more on the technical analysis side. So this is something that people will do with crypto, with digital assets in general. Tends to be more, yeah, technical analysis tends to be more relevant really for the truly top cryptos, because there needs to be a certain level of volume and just overall liquidity for technical analysis to make sense. This raises a larger point as well that there are about 23,000 different cryptocurrencies out there right now in existence. And, much like you have thousands of different assets on the stock market, most people, when they're talking about a more established asset class such as equity stocks, they're not going to just go and buy let's say just whatever's the number one stock is that day, and then I check that box, I have a stock. They're going to go in and they're going to diversify, and they're going to actively also evaluate what's going on in the broader market. So similarly, there are opportunities there, crypto. I would say to your point, I mean, I do have friends and colleagues that work on more, let's say, like Fibonacci type strategies or related. There are also, though, this raises a larger point that there are signals that can be analyzed and evaluated when it comes to more of a fundamentals driven approach, we've found really that we have to essentially create these signals ourselves, because this is not a space where there's been 100 years worth of traditions on what could and should be analyzed. There are absolutely areas to be analyzed, but because it's an emerging asset class, some of them need to be either kind of adapted from other frameworks or else done yourself. So an example of that briefly would be, let's say that there's not a price to earnings ratio in the same way as with a stock, but you can also create similar kind of paradigms that have, let's say, a similar intent and a similar results. Or another area would be that because digital assets and crypto are much more code driven, there's also ability to start analyzing areas of the code, which is not something that you would do in a stock, but you would still want to apply the same type of fundamental rigor to analyzing that.
Yeah, well, I think you could theoretically argue that the code is somewhat similar, like analyzing the performance of the company and their strategic decision making and stuff like that. I think one thing that has always fascinated me from a rather top-down, big picture perspective
Mm,
on the crypto situation is that, as you said, it being such a relatively new thing, that there is, in my opinion, quite a bit of value, even though people say this is not a good measure, but there is value, in my opinion, on the psychological state of the asset in connection to its use across the world. Because at least one of the big differences, I believe, that people are not necessarily really fully aware of is that crypto is pretty much everywhere, right?
mm,
Unless, like China, they might say, okay, we don't allow mining, but that doesn't mean Chinese don't own crypto, right? And so I would still say, even to this day, it is basically everywhere. But that also means the psychology about the asset, even any individual one, especially the bigger ones, plays a substantial role. Whereas I believe stocks, for example, as a comparative thing, have been so far abstracted that people are basically
mm,
only focusing at the number now, right? And is the
mm,
number growing or declining? Not even
mhm,
asking so much anymore what is the company doing, let alone if you go to the fund level like S&P 500 or NASDAQ or anything,
mm,
then they only look at the basically combined number of the exchange, not even
mm,
at the underlying stocks anymore. I did a little article at the end of last year to say, out of the 500 stocks in the S&P 500 before the readjusting, there were about
mm,
480 that lost value in 2023
mm, mhm.
because the other 20 were so like rocket ships. It made it
Yeah,
look like the whole index was going up. And
right.
yes, if you really own the whole index, yeah, then you got those percentages. If you, on the
Right,
other hand, would have only owned the top 10 or the top 20, and I don't mean
right.
top in the sense of performance only, but also most of it was related to type,
Yeah,
so growth or not growth stock, and then size, right? So
yeah,
they're the growth industry stocks, and they
yeah,
have the largest percentage in the index. So you would have been way better off to just have your own, like go to David and say, make me a little fundy fund that is only the top 10 in the S&P 500. It would have blown away the whole thing completely, right? But my other question, I said earlier that two, so the one is kind of like a little bit with a smirk on my face to say, is there really like technical analysis on crypto? And
yeah,
there obviously seems to be. The other one is,
yeah.
and I think this is a little bit more important for our community, is that recent decisions for the SEC, Security
Mm,
and Exchange Commission and stuff like that, have established something that I think not so many people are really fully aware or understanding, and that is the difference between an equity and a commodity. Can you touch on that?
with the full disclaimer that I'm not a lawyer or
Yeah, me neither.
yeah, so this is purely opinion, and
Right,
talk with your lawyer, tax advisor,
right,
accountant,
right.
all that good stuff. But yeah, I mean, it raises a larger question that, I mean, there are a couple of related areas. There's certainly been a lot of investigation, especially in the United States, from the SEC on whether some of these digital assets are securities or commodities, and the decisions that come in the coming months and onward are going to, I would say, dramatically affect where the digital asset space kind of develops within the United States. One thing that I would say, though, from a broader, more global perspective, is that there are other jurisdictions that have, let's say, more of a tight interaction between their commodities regulation and their securities regulation. And I would say that one of my predictions is that some of these jurisdictions are going to be among the ones that are able to more kind of robustly adapt to this new framework, because we're stuck in the United States in this dilemma of, is this a security or is this a commodity? There are some jurisdictions, they will say, you know, that there is a commodities and securities regulating authority. And so it's not a back and forth territory claiming type of a question. It's a, you know, how can we regulate this from a single entity sort of a question. So I think that becomes an interesting question of what the framework is going to be in what countries. And so then to a larger level, I think there's, you know, huge potential in the United States to kind of set the tone in certain ways on what's going to happen from a regulatory standpoint around the world, because I mean, for better or worse, a lot of countries are really curious to see what happens in the United States, but there will be adapting from other countries, other regulatory frameworks to that. So depending on what happens in the United States, certain countries will follow suit. Other countries will develop alternatives and say, oh, okay, here's a different framework that can maybe work better for certain things. So there will be, I think, a very significant interplay among the countries. But the ones that do have, there are certain frameworks that will have more advantage, including, let's say, more kind of consolidated regulatory framework type of countries, as well as countries within more emerging economies where there hasn't been as established of a financial system yet. Those are generally the types of environments where technological leapfrogging tends to happen. So, for example, you would see with the development of the kind of the mobile phone, cellular phone networks, that the United States actually, in certain ways, lagged behind other countries that were, you know, ostensibly less developed, because the United States had kind of invested billions of dollars into landline frameworks, right? And so there wasn't as much of an incentive to kind of fully embrace mobile technology as quickly, whereas some countries who didn't have a landline framework at all said, hey, let's just go straight to mobile. And there may be that we're starting to see possible kind of trends in that area in the digital asset space as well.
Yeah, no, absolutely. I'm with you on that. And it's also fascinating. I mean, it's a little bit of a sidetrack, but it's pretty fascinating to see what the outcome can be. But also from an influencing perspective, this is my own opinion about that only when you actually really look a little closer can you maybe see certain things, right? Like, I know that the financial industry in the United States has always made it sound like you can't do business with Africa and African nations because they don't have the infrastructure. Then you turn around and become a little bit inquisitive, and you find out what they really mean is they don't have those landlines that you just mentioned, but what they also don't have is banks. And the influence that banks and stock exchanges and all that kind, that whole, if you imagine the American financial industry, all its components, and what they have in Africa is cell phones and 5G towers, most of them built by Huawei and Chinese providers. And so I looked at a documentary not long ago, is how do people that have small farms somewhere in Africa actually bring this stuff to market, and how do they exchange money? And especially when you then hear about some of these kind of hyperinflation scenarios. And coming back to the crypto stuff, they can now exchange basically a good, like, I don't know, oranges or melons or whatever they're selling, potatoes, with their cell phone, with an instantaneous crypto transaction. No bank required, no cash required, no currency exchange required, none of that. And we are sitting in the US and we are saying, well, we can wait another 20 years until their infrastructure is developed. By the time we actually realize that they will never do that, they have already fully established an infrastructure that is just on a different technology with different commodities, with different kinds of currencies. So it's a while ago, admittedly, but I was pretty shocked after that documentary, I think it's probably 5 or 6 years ago, to see everybody's completely comfortable using the technology when we are basically always displaying or describing them sitting in straw huts and waiting that somebody is basically lighting a fire. Like this old, why are we giving foreign aid and stuff like that? But what I also wanted to get at, for me at least, it's important because we're looking at quote unquote hard assets, right? We want to invest in real estate, we want to invest in gold coins and stuff. And for me, it's important to say, okay, well, so one of the distinctions with Bitcoin, for example, versus the others in commodity versus security or equity, is
Hmm.
that there's a defined finite amount and there is no
Right.
external influence, right? If you look at any of the others, the big ones, the medium, the small ones, there
Right.
are certain people involved. And I think there
Right.
is a similarity when people say, so what is really the similarity? Well, you take any company, publicly traded company, stock company,
Right.
their executive team can say, okay, we have assets, so we borrow against these assets. And then when
Mm.
we have the money to borrow against these assets, then we buy back our shares. And
Mm.
basically, through that activity, and nothing illegal about it, it's all completely above board, but they
Mm.
can manipulate the share price that way. Whereas in a commodity, you have basically a fair value exchange for a thing that is in limited demand or in a limited supply, whether you
Hmm.
take gold coins or you take uranium or pork bellies for that matter. Right now, the
Mm.
pork bellies get consumed, so that's a little bit different. But fundamentally,
Mm.
somebody establishes a price and that is the exchange versus
Mm.
basically internally the ability to make the price or change the price by
Mm.
making certain decisions. And I think that's an important distinction, right? And it's the same thing in our real estate investing. The market basically makes the price and says, okay, this house in this neighborhood is what determines how much the value is that we can ask currently for this house, right? And
Mm.
so for our investors, I thought it was important to say, yes, we want to diversify. And that's why I'm glad that we brought you on, David, to tell us a little bit what are options and who is out there who can help us with that. But there are also similarities to what we're already doing. And I always say, let's try to stay away from the casino. We can play a little for fun, which I'm doing with my Tesla shares, but we not really want to call that investing. We want to do investing with people like you, David, who help us with grown and longer in life crypto assets and technology and blockchain and stuff. So when people say, okay, I want to add that to my portfolio, I want to maybe see if David can help me get, a little bit into his fund or stuff. Can you tell us two things? Number one, is there a limit for people to join you and do a little bit something with you and get your help? And then how can they get in touch with you?
Briefly though, just to some of your points, I liked what you were talking about around some of these different markets, and you're talking about commodities and securities, and I think that there's a lot at play there. Maybe a lot more to be mentioned than we probably
Oh
have
yeah, we
time
need
for.
it.
But to that point though, I think this comes down to the broader use case around digital assets. That looking back into 2023, for example, Bitcoin in particular outperformed major stock indices, bond indices, gold, oil, etc. Which is, there are good years and bad years for different assets, but in particular, crypto was having a somewhat of a challenging year from a regulatory and infrastructural perspective that year, and still managed with Bitcoin to outperform a lot of these other major market players. The point there, to your point about diversification, is that we see digital assets as playing a valuable role in a larger portfolio, where if you look at analyses along the lines of modern portfolio theory, which, granted is kind of perhaps controversial / outdated, but is a benchmark. If you look at, let's say, surveys also of family offices, high net worth individuals, they're seeing kind of a preference increasingly to allocate somewhere between uh, I'd say on average 4 to 5% into digital assets. And, like with anything, it's a very personal question. For some people, it could be lower than that. For some people, it could be much higher than that. Also depends on, kind of whether you're targeting a conservative, moderate or aggressive type of track record or whatnot. But basic point being that with a small allocation along those lines, an emerging asset class like digital assets can provide a hedge against broader market volatility. When some of these other kind of more mainstream assets are really suffering historically, for example, during various, even during COVID, for example, crypto was performing better than certain other mainstream assets. So you see these places where it can provide a real hedge against broader market volatility, and also a place where it can provide asymmetric upside, where a small allocation into an emerging asset that has been growing exponentially could end up becoming a much larger piece of the pie later down the line. To your other question about kind of how we operate and such. So generally speaking, we as a fund manager work with fund vehicles that are primarily private funds. So these tend to have minimums that can be anywhere from the 50,000 to a couple $100,000 range, depending on the organizations in question. And then they often also are more closed network of investors, where we are really focused on basically adding value to people who are already within our network and already within our community. So to that point around larger community, I'm here in general to help bring awareness around the digital asset space. We're here, we do a lot of educational initiatives. So for example, some ways to stay in touch would be we have a newsletter that is both on our website as well as on our LinkedIn page. I'm also quite active on LinkedIn myself, so feel free to reach out and add me there. And then beyond that, also to the point of community. So our fund management group is part of a larger network that helps with organizing a broad variety of events in Davos in Switzerland during WEF Week. So these are private events, not affiliated with any kind of government organizations or related, but the point being that we organize consortiums, think tanks, private receptions, where we're looking at basically building out a community of partners where everyone can benefit from networking with each other, insights with each other. So another way to stay in touch would be if you'd like to visit digitaldavos.app. You can engage with the broader community and also suggest speaking topics for panels, which we run ranging from online to some of them also in person in Switzerland, in Davos as well. So yeah, that would be a variety of different ways. I guess there's probably something in there for everyone.
Absolutely, and we're going to put some of that in the show notes so people have an opportunity to find you and ask questions and learn. Because I mean, like you said, I agree with you, this is still such an emerging field, even though some of the assets and commodities have been around now for like 15 years or so, but it's still, in comparison to most everything else, it's still very new.
There's a lot to be said for intelligently analyzing and diversifying, be it in real estate or in digital assets or otherwise, and also a lot to be said for basically having a network of people that you can get insights from, regardless of what the asset class is.
Absolutely, and I really want to thank you for doing that work and educating the public and those who are interested in it, because there's so much stupid stuff, you know, like we're still talking about only terrorists and drug dealers are using crypto and stuff. I'm kind of sick and tired of it, and it takes good people with good background and deep studies and a kind of conscious and somewhat academic view on it to give it credibility, and you're one of the great examples for that.
Well, I appreciate that. I guess a brief thought on that note actually is a very interesting insight from a number of researchers, but looking at basically capital inflows. For example, there was a kind of a Russia controversy around digital assets, but looking at the data on the blockchain, roughly 40 times as much capital is flowing into supporting relief and resistance efforts in the Ukraine as there is capital coming into Russia on the blockchain. So to your point about legitimate versus illegitimate activity, in that particular case, that there's over 40 times as much legitimate activity there is something that I find really impressive.
So thank you for describing that and explaining that. And coming to the end of the show, we always ask one or two final questions. So the one I definitely want to ask you is, if you could meet anybody, who would it be and why?
Well, I've got to keep this on brand with crypto. I would say Satoshi Nakamoto, whoever she or they may be, the founder, the anonymous or pseudonymous founder of the Bitcoin network.
You threw that ball, right? Like, so I have to catch it and ask you, those recent sightings, is that person still among us, or what do you think?
I don't think it's likely. I mean, the sightings I'm familiar with, if what you're referring to is what I'm thinking of, is someone sending money into the wallet. If anything, was more a marketing ploy than anything else. Yeah, I mean, I've been in the crypto space for about 7 years now, and I've seen all sorts of things of like, you know, people saying that they know the identity and they're gonna do a reveal party or whatever, and then it's just a stunt. So
you brought up the name, it was kind of
Yeah.
a fun thing. I've actually seen people
Yeah.
trying to ask ChatGPT to analyze the white paper to see if they can then find other writings that have the same writing style
Love
to
it.
kind of narrow it and all that kind
Yeah.
of stuff.
Huge unsolved mystery. Yeah.
Like I said, thank you for being there and educating all of us.
Thank you for having me on the show. I really enjoyed your macro insights. Thank you for being a great host.
Yeah, thank you so much, David.